Good evening and thanks for joining us. This is NTD Business. I'm Paul Graney. Fed Chair Jerome Powell and Treasury Secretary Steve Mnuchin testified before Congress today. They say more targeted stimulus is needed, but another official says we might not need another relief bill. The UK government announces new restrictions to help curb the spread of the virus, but a hospitality group says the new measures could be devastating for the industry. Americans' total net worth hit a record high in the second quarter, thanks to government aid and the stock market rally. And US home sales surged to their highest level in 14 years. The housing market continues to outperform the overall economy. Federal Reserve Chairman Jerome Powell and Treasury Secretary Steve Mnuchin were cautiously optimistic today at a House hearing. They say the US economy is rebounding from the recession, but that more help from the government is likely needed.
Fed Chairman Jerome Powell told the House Financial Services Committee that he believed the economy was healing.
Many economic indicators show marked improvement. Household spending looks to have recovered about 3/4 of its earlier decline, likely owing in part to federal stimulus payments and expanded unemployment benefits.
Mnuchin says the country is in the midst of the fastest economic recovery from any crisis in history.
I believe we will see tremendous growth in the third quarter, fueled by strong retail sales, housing starts, home sales, manufacturing growth, and increased business activity.
Striking a more cautious note, Powell noted that the job market has regained only about half of the 22 million jobs that were lost in March and April. Both officials stressed major sectors of the economy were still suffering and further relief should be more targeted. They both support further aid for small businesses hit by the pandemic.
The president would very much support signing into law additional PPP money immediately.
I think PPP is a better way to approach that space in the market, and I think you were well advised to use that.
And the Fed Chairman Powell will testify twice more this week and likely keep pushing for more stimulus. But there are mixed signals from the Fed on more aid. The St. Louis Fed President James Bullard said on Monday that the US economy has enough momentum to sustain the recovery even without another stimulus package. He says the original fiscal package passed in March and April was designed for a bigger shock than we actually saw. The federal government borrowed at about 10 to 14% of GDP, but GDP is now only expected to shrink 3 to 4%, and it seems like, at least in some broad macroeconomic type of calculation, we have enough resources to cover it. So even after Powell's calls for more stimulus, will we get it? Ask Fed watcher Joseph Trevisani. He's senior analyst at FX Street.
Well, I think it's probably not that likely. My answer would probably be no. The Fed has had this opinion since March that monetary policy and anything else that they do is not going to be enough. They got what they wanted, of course, with the initial stimulus package, $2 trillion. The issue now is that we are approaching the season, we are actually in the season where everything is political. And that includes the economy and anything that might be involved with making the economy better or worse or leaving it as it is. All considerations right now, I think for both parties in Congress, run through the election. So you would get one side saying, well, if we improve the economy, if we provide more stimulus, that will certainly register in time for the election. And what will that do for the likely chances for the reelection of Donald Trump? And the other side is liking that and would want to do the same thing. So I think the ability to get it done now, after all, the economy is in much better shape than it was back in March and April and May. So it's not nearly as crucial to the well-being of the country as it was before. Do we still need it? Yes. Are we likely to get it? I would have to say no. This time, election politics rule, not economics.
And after the interventions by the federal government and the Federal Reserve, the total net worth of American households and nonprofits hit a new historic high at the end of the second quarter. Surprising, no? But notice the word total. It's unclear how the wealth was distributed across all Americans. Emergency government aid tends to benefit the people at the top who have access to it, money managers, big business, etc. But all Americans pay the cost of it in the long run, since it's debt taken out in their name. In the second quarter, equity portfolios were helped by the surging stock market.
A new Federal Reserve report shows that household net worth hit an all-time record high of nearly $119 trillion at the end of the second quarter. Household net worth is the value of homes, stock investments, and other assets minus what is owed on mortgages and other loans. The sharp $7.6 trillion jump from the prior quarter is also the biggest quarterly increase in household net worth in history. Household net worth at the end of the final quarter of 2019 stood at an over $118 trillion. The outbreak of the CCP virus then dealt the economy a colossal blow, wiping out around $7.23 trillion in the wealth of households and nonprofits, the biggest such quarterly drop on record. The wipeout included an $8.29 trillion drop in stock values. Then, thanks in part to federal aid, including an unemployment benefit boost, forgivable small business loans, and Fed stimulus, household wealth staged a sharp rebound. In the second quarter, stocks and mutual funds saw a $5.7 trillion increase in value. Debt securities rose by $67 billion, while real estate gained $458 billion. Wealth was also boosted by a $700 billion increase in savings among households.
But it seems home buyers aren't worried about the economy slowing down. Sales of existing homes rose to the highest level in 14 years in August. A housing market way ahead of the overall economy. Existing home sales increased 2.4% in August to 6 million units. That's over 10% more than a year ago and comparable to pre-pandemic levels. It's the third straight monthly gain after the big consecutive declines in March, April, and May, although the pace of sales has slowed significantly after back-to-back months of more than 20% gains. And Wall Street stocks rebounded Tuesday, led by a jump in Amazon. Other major tech stocks, including Microsoft, Apple, Google parent Alphabet, and even Facebook, all rose today. Tesla fell 5.6% though. Elon Musk saying it could be difficult to speed up production of its electric cars because it's relying on large-scale aluminum parts. Oracle also slipped. A state-backed Chinese newspaper saying Beijing is unlikely to approve the proposed deal for TikTok. The Dow rose over 140 points, or 0.52%. S&P 500 gained over 35 points, or 1.05%. And the Nasdaq added almost 185 points, or 1.71%. And the UK government has announced new virus measures and says they'll be in place for 6 months. A 10 p.m. curfew will be imposed on all restaurants and pubs, people being told to work from home again, and the rule of 6 will stay in place, so you can't have gatherings of more than 6 people, except for special events where you can have 15. If you break the rules, you'll be fined the equivalent of $250 at least for first-time offenders. Boris Johnson's U-turn on reopening the economy is surprising, for me at least, given COVID deaths have remained flat. Also, the surge in cases is at least due in part to increased testing, which has almost doubled since August. We have analysis on the economic impact of the move soon. First, we have our UK correspondent Patrick Hayden with details on the new restrictions.
British Prime Minister Boris Johnson is slamming the brakes on the country's return to offices and a normal social life.
I'm sorry to say that, as in Spain and France and many other countries, we've reached a perilous turning point.
He says cases have nearly quadrupled since a month ago. Johnson's new restrictions include requiring pubs, restaurants and other entertainment venues in England to close down between 10 p.m. and 5 a.m. He's also urging people to work from home where possible. Face coverings must be worn in taxis and by retail staff. The size of gatherings is being curtailed, with weddings limited to 15 people instead of 30. A plan to bring spectators back to sports stadiums starting in October is being put on hold. Britain is also increasing the penalties for breaking the rules. More than 25 regions and cities are already under second lockdowns after cases have surged. The changes come after the UK raised the COVID alert level from 3 to 4, which is the second most serious stage. If regions can demonstrate low levels of infections in the new lockdown, some regions will be permitted to come out of lockdown, Johnson promised. He says the government will deploy greater firepower with significantly greater restrictions if it needs to, but he says he fervently wants to avoid it.
UK businesses are now legally required to take customers' contact details so they can be traced if there's an outbreak. And they could be fined up to £10,000, that's about $13,000 if they don't do it. They'll also be fined if they take reservations of more than 6 or don't enforce social distancing. Now, on top of all those worries, they'll have to close at the 10 p.m. curfew. The chief executive of the UK Hospitality says it will be devastating for trade.
And a 10 p.m. curfew means that businesses have to be empty, closed and locked up by 10 p.m. That means last orders at 9, so it halves restaurant revenues, it decimates pub sector trade, particularly on top of the other measures that have also been announced today. So it would put a lot of jobs at risk.
Nichols oversees a prominent industry body representing bars and restaurants. She says businesses have made significant progress, but the new measures will knock firms back right to July. She also warned that with the furlough program ending soon, it will be make or break for many firms in the hospitality industry. And Daniel Lacaille has spent much of his working life in London's financial district. He's now the chief economist at the Trevisani hedge fund. He's travelled to different parts of Europe this summer. I asked him if he saw different results depending on the type of lockdown implemented.
Absolutely. We have seen that the countries that have not implemented lockdowns are managing better the pandemic and are managing better the economy, preserving the business fabric. Countries that have very simple but strict measures in order to contain the pandemic with information of people, where they are. You give your details in restaurants, whatever is needed, etc., with very strict measures of social distancing, while at the same time not forcing massive lockdowns. Sweden, Austria, Switzerland, Holland, so many countries are doing better at preserving the business fabric and managing the pandemic. So it is wrong that that lockdowns are inevitable, that they have to be implemented. It is incorrect, and it's misguided in the idea that it's not going to create a much larger and long-term effect, negative impact on the economy.
And you've worked with financial models before. This new proposal from the UK government is based on the pandemic models and models of the spread of the virus. Have you ever made such a big decision based on a model?
Well, when you make decisions based on a model, the first thing you do is that once you have tried it and you see that the model is incorrect, you don't repeat it. This is critical. Sorry to be a little bit blunt here, but it makes absolutely no sense to work with a model that is making assumptions based on such limited amount of data for such limited amount of time. And it makes absolutely no sense to take action that is so severely impacting the economy, job creation, which will create ripple social effects and healthcare effects, the negative ones in the future, based on a model that was wrong the first time over.
And I'm sure you have lots of business owners as friends in the UK and friends there. How do you think they're feeling on the news?
Well, everybody's absolutely amazed. Everybody understands that the lockdowns were a mistake, that the lockdowns in Europe and in the United States, in Argentina and other countries have not worked to contain the pandemic and have been devastating for the economy. So the idea that targeted lockdowns are not going to have massive impact on the economy, an economy that has been crippled, that is completely on its knees, businesses are suffering immensely, can only be thought by a bureaucrat. The European Union countries that are thinking about new lockdowns, etc. First, they're not taking the measures, and I come back to this point, managing the pandemic while preserving the business fabric and the economy is something that other countries are doing successfully. It's done in Asia, South Korea, Taiwan, Singapore. It's done in Europe. Austria, Holland, Sweden, so many countries, Switzerland, etc., are managing the pandemic and preserving the business fabric much better without the need of misguided and ineffective lockdowns.
You're right, Daniel, and I really feel for them there in the UK. Appreciate your time. Thank you.
Thank you very much.
And still to come this evening. Short seller Muddy Waters raises doubts about Israeli medical imaging company NanoX. It accuses the company of having no real product to sell other than its stock. And the Justice Department cracks down on a bribe scheme at Amazon. It's worth over $100 million. 6 people were indicted. That and more after the break. Welcome back. The notorious short seller Muddy Waters Research is calling out an Israeli X-ray company as a fraud. It says nanotech is listed on the NASDAQ, has nothing to sell except its stock. NanoX is supposed to be the next big thing in medical imaging, offering X-ray machines for a fraction of the usual cost. But Muddy Waters says it faked a demonstration and likely got the medical images it used to promote the product from another company. It says NanoX's product is nothing more than a futuristic movie prop. The short seller says it interviewed 5 radiologists who agreed. Muddy Waters is the second short seller to sound the alarm. Citron Research released a similar report last week. NanoX's stock is down around 35% since then. And in other news, the Justice Department says nearly 200 alleged drug traffickers have been arrested worldwide. It's part of a crackdown on opioid trafficking on the Darknet. 120 were arrested here in the United States. The FBI director says the joint international operation sends a strong message.
Every day, they're working to show these criminals that they can no longer count on hiding on the Darknet, because we're going to infiltrate their networks, shut down their online illicit marketplaces, and bring them to justice, no matter what it takes.
Along with the mass arrests, authorities also seized $6.5 million in cash, along with over 1,000 pounds of drugs worldwide, 600 pounds seized in the US. The international opioid crackdown is being conducted across the US and Europe. And in other news, the federal government is cracking down on a multi-million-dollar fraud scheme at Amazon. Sellers allegedly bribed Amazon employees to get better sales for themselves. NTD's Phil Zoe reports.
6 individuals were indicted for a $100 million scheme at Amazon. The Department of Justice says they paid over $100,000 to get an unfair advantage on the Amazon marketplace.
A fraud expert told us bribery and insider fraud is a big problem globally.
About 5% of companies' revenues, 3 to 5%, could be lost due to insider-type fraud schemes.
He says that could mean a potential global fraud loss of nearly $3 trillion for all organizations. He believes Amazon lost more than just money. Its reputation could be at stake.
The financial loss is only part of it. The erosion in their reputation and the fact that, consumers and shoppers may not trust them as much, that's almost immeasurable.
McKenna says shoppers need to fend for themselves. They need to look into the products they're buying.
If it's too good to be true, it probably is. So make sure that you do your due diligence, especially if you're buying something that's a sizable purchase. You need to look at the reviews, you need to look at the history and everything that you can to make sure that you're buying from a reputable seller.
One Amazon Prime member says this will not change her shopping habits on Amazon.
Because I have my own way of fact-checking reviews when I go about my shopping online, and I know the kind of products that I'm purchasing.
Another person says Amazon is so common, shoppers have no choice but to use them.
But the fact is that if they're going to sell a product that I want, I'm probably going to go to them.
One shopper says she's not surprised about the corruption. She'll continue buying online based on reviews.
And I look at the, the number of, good reviews, and then I make a determination from there.
The defendants of the bribe charges can face up to a total 25 years in prison and a combined $500,000 fine. They're scheduled to appear in court on October 15th. Phil Zhou, NTD News, New York.
And still to come. Over a dozen EU countries launch a new investment campaign in Taiwan. It signals closer economic ties with the island democracy. And Intel gets a license to keep selling some tech to Huawei. New U.S. sanctions against the Chinese telecom giant took effect last week. Find out more after the break. We've just had the first EU-Taiwan investment forum in Taipei on Tuesday. It signals Europe's warming economic relationship with the democratic island and growing skepticism with China.
Now it is up to us to take it forward.
The historic forum is organized by the European bloc's de facto embassy in Taiwan and involves 15 European countries, including Germany, France, the Netherlands, Italy, and Spain. Taiwan President Tsai Ing-wen says a bilateral investment agreement, or BIA, will help build stronger economic ties, and Taiwan is ready to partner with the bloc in IT, biotech, and health sectors. The island is famous for its technology and semiconductor industries.
A BIA is the key to this success and will help us all thrive in the digital age.
The head of the European Economic and Trade Office says the pandemic has exposed the vulnerabilities of global supply chains, and Taiwan could be a great partner as the EU adapts to these challenges because it shares the same values of an open, transparent, and fair international trading system.
The European Union and Taiwan have unique possibilities to work together and embrace the new opportunities in this changing world. Old answers and business models will not any longer work in the future. We better change before we have to.
The European Union's more friendly posture toward Taiwan follows signals of a closer U.S.-Taiwan relationship. 2 high-level U.S. officials have visited the island in the past few weeks. Meanwhile, the EU has taken a stronger stance against China. In a recent summit, it called on China to open up markets and respect human rights. The EU was the 4th largest trade partner with Taiwan in 2019, and its trade with the island was about $24 billion in the first half of this year.
Good news for Taiwan. And Intel just got a license to continue supplying certain products to Huawei. New U.S. restrictions took effect last week that ban firms from exporting U.S. technology to Huawei unless they get a certain license.
Intel has won U.S. licenses to keep supplying some technology to Huawei. That is despite new curbs that came into effect last week. Since September 15th, they've barred U.S. firms from supplying or servicing the Chinese telecom gear maker. However, this week the state-backed China Securities Journal said Intel had been given some licenses. That was confirmed Tuesday by a spokesman for the US chip maker. Rivals are hoping to follow suit, though they weren't optimistic that non-US producers would be granted permission. Instead, chip makers are reportedly working on plans to increase supplies to other customers. With US-China ties under strain, Washington has been pushing allies to squeeze out Huawei, which it says colludes with Beijing's intelligence agencies. The firm denies all such charges.
That's the latest business updates for today. Thanks so much for watching. See you tomorrow.